Good afternoon. In this chapter, we are going to look at different types of current liabilities. Now we're going to look at a contingent liability. So before we look at a contingent liability, the exercise, let's see what it is and how we will do any journal entry if required. So to start with, a contingent liability is an existing uncertain situation that might result in a loss depending on the outcome of the future event. It may be a loss or an expense. Basically, it's resulting in some kind of cash outflow. So examples are lawsuits. I have been sued. I'm contesting, obviously, the lawsuit, but if I lose, I'll have to pay up. Product warranty. Anytime you sell a product with a warranty, you assume the risk that the item is going to come back to you. You either need to replace it or fix it. You're going to spend some monies or give up some products without getting cash. Environmental problems, these are a big item these days. Premiums offered. Premiums offered is basically talking about coupons. You will get, the famous one was Bed Bath & Beyond. You got a coupon in the mail. Each time that coupon was issued by Bed Bath & Beyond, they were assuming a liability, as in someone would come in, and if they brought that coupon, they have to give them 25% or 20% off whatever the deal was. So now the question is, how do I do the accounting for all of this? Well, that depends on various factors. So what are the things we're looking at over here? So first thing what we're looking at is, what is the likelihood that I'm going to have to make the payment? So there are three possibilities. The first one is, it's probable, which means it's likely to happen. So product warranty, your premium offers, the coupons, those are definitely probable. They're likely to occur. Then you have reasonably possible. Well, before we get to that, let's look at the third one, remote. Remote is the chance is so slight that I'm not going to worry about it. Well, between the first and the third one, while I'm not sure that it's probable, but I don't think it's remote. That's our in-between category, reasonably possible. So it's there in the middle. Well, in accounting, if it has to enter our financial statements, we have to do a journal entry. To do a journal entry, I need to know which accounts to debit and credit. And the other big item is the amount, how much. So now let's look at the other part of what we are not sure about. How much would we have to pay if there is a lawsuit? Now, someone could sue me for $1 million or 10 million or 20 million. Well, I may or may not lose the lawsuit. If I lose, I may have to pay that amount or lesser or more. So now the question is, can I reasonably estimate that amount? Or I cannot reasonably estimate the amount. So a lot of the environmental problems, a lot of folks will say, well, I can't estimate what the reasonable amount is for this to fix this problem. So again, in our world as accountants, I need to know an amount in order to do a journal entry. So if I have to do this adjusting entry, I need an amount. So if it is probable, it's likely to occur, and I can reasonably estimate the amount, I have to do a journal entry. I have to record a liability. So a contingent liability must be recorded. Well, what happens if I cannot estimate the amount? I say it's probable, but I don't know the amount. In that case, in my notes to my financial statement, in the disclosures, I am required to put down the disclosure, giving details about what the situation is, and maybe give a range of the amount, even if I can't give an exact amount, or I say I cannot really estimate the amount. But I'm saying, yeah, this is probable, it's likely to occur. Well, what if it's reasonably possible, but I really don't think it is probable? In that case, I will do a note disclosure. Whether I know the amount or I don't know the amount doesn't matter. I'll have to do a note disclosure. If it's remote, I'm saying it's so remote, maybe I can estimate the amount, maybe I can't estimate the amount. Well, guess what? You don't have to do any disclosure. So probable, I have to do a journal entry if I know the amount. That's the one we're going to focus on. I will do a journal entry if I know the amount. Here, what we are looking at is if you're looking at product warranties, definitely product warranties. I'm going to highlight this over here for us. And if you're looking at the premium offers, that's the coupons, in those cases, you are going to record a liability. You are going to do a journal entry because you can estimate those amounts. You will do a journal entry. Remote, we don't have to worry about journal entry, nor do we have to worry about any disclosure. Management makes this decision, what level it is at. At some point of time, you can't deny it and keep saying it's remote. There are companies that have done it in the past, but we'll not worry about them. We will worry about the exercises where they give us the relevant information. So what would I do in my adjusting entry when I have to record a liability? That's the one where we have a journal entry. In this case, what I will do is I will debit an expense and I will credit a contingent liability. I will debit an expense and credit a contingent liability. So now let's take a look at an exercise where we are going to work on the journal entries. So we have computer wholesalers that restores and resells notebook computers. It originally acquires the notebook computers from corporations upgrading their computer systems. So these guys are like the resellers of computers. And it backs each notebook. Anytime you resell a product like an electronic, if you don't give some kind of a backing, most people are not going to buy it unless you sell it for dirt cheap, in which case you're not going to make any money. So here they're giving a 90-day warranty against defects. Based on past experience, computer wholesalers expects warranty cost to be approximately 6% of sales. Sales for the month of December are $600,000. Then they tell us actual warranty expense in January the following year is $13,000. December 31st, I need to decide whether I have to do a journal entry or not. So the first question being asked is, does this situation represent a contingent liability? Probable, reasonably possible, or remote? What have they told us? They've told us based on past experience. They expect it to be 6% of sales. So yeah, it's definitely probable. And they're telling us what the amount is likely to be. They can estimate the amount, and therefore we have to do a journal entry. So definitely it is a contingent liability. So now we have to do the journal entry on December 31st. Or before we do the journal entry for the adjustment, we'll just do the journal entry for the sale. Let's assume it all happened on December 31st. We had $600,000 in sales. Of that, we are saying 6% is going to be a problem. That 6% that's going to be a problem is warranty expense. Remember, we said we have an expense debited. So it's warranty expense debit. And a liability, the contingent liability, give it the most obvious name, estimated warranty liability. It's not yet a warranty. It's not yet I can't say it's warranty liability. That would mean that I have incurred the liability already. It's an estimated number. It's going to be 6% of this $600,000. 6% is $36,000. So I'm saying I think it's going to cost me $36,000 to fix any problems that come back within the 90-day window. I'll do a T account over here, and that's for part 4. Warranty liability, or actually I should call it estimated warranty liability debt in the T account. And the amount is $36,000. In part 4, I'm jumping to part 4 over here. They ask you what is the balance in the warranty liability account after the entry in the second journal entry. The second one over here. In part 2, they ask you to calculate the warranty expense. That was what we did over here. So it's $36,000. Let's do the journal entry on January 31st. Through the month of January. So there are numerous journal transactions that have happened. Customers have come back, we have fixed the problems, and it's cost me a total of $13,000. The $13,000 could be parts or labor or a combination of the two. That's $13,000. So I debit estimated warranty liability and I credit cash. So instead of doing salaries, expense debit, cash credit, or the inventory parts debit, cash credit, we're doing warranty liability debit, cash credit, and that's the $13,000. After this journal entry, warranty liability, I will have $13,000 on the debit side, leaving me with a balance of 36 minus 13 leaves me with a balance of $23,000. That's the balance in the account. So part one, they asked you, does this represent a contingent liability? The answer is yes, because it's probable, it's likely to occur. We can estimate the amount. Part two, they asked us to do the journal entry. That's the second journal entry we did. That was the one that we were asked to do. Part three, they asked us to record the payment, warranty liability debit, cash credit. That was for the payment. In part four, they're asking you, how much do you have in that account after the requirement? After you answer the question in 2 and 3. After 2, it's 36,000. After you did this journal entry, it comes down to 23,000. So this is an example of a contingent liability. More and more, this is becoming very problematic for companies. Therefore, you have to pay close attention to contingent liabilities and see how the company is handling the accounting aspect of it, as in, are they being real or not, and just being unrealistic and saying it's all remote, we don't have to worry about it.